Thanks for staying with us. You're watching Tracking Trends with me, Nikunj Dalmia. Over the next 30 minutes, we'll talk about earnings. If IT stocks bounce back post numbers, could we see a same in, let's say, some of the banks? And could we see a similar kind of a move in some of the FMCG stocks? And before we do that, here's a look at the headlines and what we're tracking for you this Tuesday afternoon. In terms of the market positioning, and the market positioning is the Nifty has reclaimed 22,000, but after a brief slip. Broader market underperformed the Nifty, and the top sectoral laggards are essentially IT, pharma, and the real estate space. Just a little bit of skim from the top, if I may say so, at least when it comes to some of the top IT companies. So what are we discussing, and what is the cue for our viewers to really learn and implement? Will we see will earnings steer Nifty higher? And are we in for a repeat of bout of short covering in names like Reliance and in private banks, considering that Reliance has just caught up last week and private banks are still being laggards, and the bank Nifty is not at a 52-week high post the numbers. So why are we discussing numbers this week? Well, it's largely because of the composition of the numbers which would be coming out, or composition of companies which would be coming out with numbers. You got HDFC Bank today, 13.5% weightage. Reliance later this week, 9% weightage. ICICI Bank, Kotak and HUL, 7%, 3% and 2.5% weightage, which means broadly 35% of the Nifty 50 will be coming out with numbers this week. That is something which is going to be important. There you go, HDFC Bank 13, Reliance 9.2 and ICICI Bank 7.4. So I'm going to just invite Kunal also to join in the discussion, and we'll take this theme forward, which is that are we in for a repeat of short covering in some of the stocks? So Kunal, everybody wants to know that these are the heavyweights which are coming out with numbers. And IT short covering has spoiled everybody, which is that you bought a little bit of bad news. And if you really believe that the turn is around the corner, IT stocks, at least on Friday and Monday, they really did a somersault.
Correct.
So are private banks also in for similar move? Because frankly, ICICI Bank and HDFC Bank have underperformed.
Yeah, they have underperformed, but the dynamics when we look at the trade setup is completely different, Nikunj. Same time last week, I think we were discussing
Infosys call was a big call.
Yeah, so we were discussing that the IVs for these stocks were almost 28, 28.5, 27.5. The IVs for HDFC Bank is 21.5 to 22.
What does that mean?
So it indicates that people are not going with any extreme kind of expectations, which means that the stock ideally should not trade with a 2% or a 3% gap up or gap down move for HDFC Bank. Same is the case with Reliance. In fact, the IVs for Reliance are much lower than HDFC Bank so far. So that also indicates that the expectations for Reliance going forward is a bit more tepid this time around.
ICICI Bank?
I've not seen the charts, the exact data for ICICI Bank in terms of the IVs, but then when I look at the prospects of these two formidable names, my expectation is that it could be around 20 to 24.
Okay, now I'll be very specific here. Let's look at Reliance and then we look at banks. So specifically when it comes to Reliance, what are the factors which are at play? Of course, in terms of the O2C segment, expectations are that it could be a drag. In terms of gas exploration, everyone is expecting that it again is going to be flat. But specifically when it comes to retail and telecom, I guess there could be steady growth on growth. Now, there are two ways of looking at Reliance. Number one, the move has already happened. Kunal feels that we are not in for a pre or post-result move. But are we in for a post-result sell-off for Reliance?
Doesn't look like, Nikunj, because this 200-point rally which has happened pre-result, from 2600 to so far 2800, it's actually given a cushion to the stock. And rarely we've seen Reliance going into a result on a rally, and post-rally it's almost sell-off and compensated for the entire rally. It's almost given up the entire rally. It's not happened for Reliance Industries so far in the last, I think, so many quarters which I have tracked.
The other one is HUL. Muted volume growth. Again, stock's been like a laggard. It has given advantage of benign raw material prices, and the commentary on demand in a sense would be increasing. Why am I bringing HUL? Because if you frankly look at stocks like HUL, Nestle, Dabur, Britannia, this is one pocket which is not at a 52-week high. With the exception of, let's say, Tata Consumer, none of the large FMCG stocks are anywhere close to the 52-week high. So let's look at that table. All of them are down.
Exactly.
and they are not down in a meaningful manner. But again, with HUL, there are no expectations.
Yes.
Could it be the reverse?
It could be the reverse with HUL because when we look at the charts for the other names, Dabur, then you look at Britannia, many of these stocks have actually done very well. So I think in that regards, HUL has been an underperformer since last 3-4 months, which means that the scope of a surprise on a positive side is pretty much higher.
What about ITC?
I think ITC is still into a range. So even the data right now, so what had happened was ITC at 470, 475, where it's trading, there has been two strikes of options, 450 and 500, which have become hub for option writing, which means traders are going into the results expecting that it may not be a more than 3 or 4% up move or down move for ITC, which means largely it should be range bound.
Okay, so let's look at the blank sheet and we're going to use the pen again just to establish that some of the thoughts which we have now, and we're purely talking about the near term. I think on Thursday we discussed with Kunal that there is a trade which is coming in Infosys, and Friday that trade I think just worked like a charm. So Kunal, thank you for that. Now let's look at the trade, Kunal. Yeah. First I will look at Reliance. You think there is no result trade?
No result trade, but no bearish also.
Okay. No trade.
Yeah.
Okay. HUL, there is a trade.
On the bullish side.
Okay. Right. And then you what?
HDFC Bank. This could also be very neutral, I would say.
I could again say no trade.
No trade.
So guys, just note it down. Kunal feels that in Reliance there is no trade. HUL, there could be a positive trade, so you buy it even after a gap up.
Yes.
And HDFC, there again could be no trade.
Yes. In fact, for HUL, if the stock actually gaps up by even a couple of percentage points, that's a very good sign.
That means you should buy the trade.
You should definitely buy the... Okay.
Now let's look at HDFC Bank, and what am I trying to summarize here? Let's look at the intraday graph. My point is very simple in HDFC Bank, which is, thank you Kunal, which is that HDFC Bank has not disappointed. 5-6 quarters on the row, it has just been a steady performer. Now Infosys surprised everybody, Wipro just stunned everybody, HCL Tech stunned everybody. HDFC Bank is not going to do anything special, and if there is a pre-result number, I think they've already given you quarterly guidance. You know that it's going to be in steady ship. So now for HDFC Bank to catch up, it has to be a function of technicals. You know, that love affair which HDFC Bank enjoyed is actually not there. So from it being a backbencher, it has to come up. And for that to happen, more than numbers, you need flows and technicals, and which may not be a function of this number. My limited point is that HDFC Bank, based on these numbers, is unlikely to be at that big turn like we saw in Infosys, TCS, or for that matter, any other bank.
Correct.
Is that a fair assessment?
Yeah, it's a fair assessment.
Okay. Here out some more views on markets. And here's an excerpt of my chat with Vineet Sambre, and then we'll take some specific queries with Kunal after this break.
IT has been a bit complex in a way. We are broadly, let's say, equal to underweight across most funds. We are not overweight in a way. And the whole stance was that as the world goes through a slow period, the IT also will sort of reflect that. And in terms of business momentum, maybe it is reflecting, but not in terms of the price momentum, because people are looking forward, looking ahead as the interest rate globally, let's say, cools off, it gives some kind of boost to the economy, and that's what maybe people are pricing in. So from that perspective, IT, I think overall remains a decent sector to be in, considering the cash flow generation, the dividend payouts, and the long opportunity which these companies will target. My judgment would be that it is good to be with the traditional guys, because what is happening, I'm hearing the commentaries coming out from these companies, and all of these companies have started talking of the generative AI space and the requirement that most of the customers are now wanting to adopt that into their whatever softwares they are working on. So I think that's going to be an important space which is going to grow, and I don't think our companies are going to lag behind, is what it seems like today, while it's very too early to comment, and I'm not an expert, but I feel that these are the areas which will give decent business momentum to the traditional guys. Overall, for us also, the PSU exposure gradually has gone up this year, and this is again backed by data which is changed. So when you break the PSU basket down into PSU banks, defense companies, energy companies, power companies, utilities, and let's say the logistics businesses, I think in most cases, what we observed is that not only the growth rates have inflected in few cases, but also qualitatively, the ROCs, ROEs have improved quite a bit significantly. So I think those are the points which we felt that should not be ignored, given the fact that they are in a stage where the order momentum is improving and the balance sheet quality is also getting better, and not that they are as expensive as the other parts of the market. So we have been selective, although not as a basket approach. We are not buying everything, but wherever we feel it makes sense, as I said, in terms of our framework or matrix, we have taken increased exposure across these buckets, what I mentioned.
Let's address our queries now, and to address some queries now. First, I'm going to just thank Mr. Anil Kumar Bhalla from Jalandhar. Thank you for sending us your query. 500 shares of Z. Big question, Kunal, is buy, sell or hold Z. On a daily basis, 3-4 query aa raha hai Z pe. Everybody's curious. Technically, how is Z looking?
No, I think I'll still stay away from Z. In fact, my recommendation is to stay away from the stock because there is no signs as such that the stock has bottomed out. So, the first sign which you look out for is the volatility has to settle. I mean, if the stock keeps on going 10%, 20% in a matter of few days, few weeks, the stock is not settling into a trading range. News flow has also been not too much positive for the stock. So even the prices at 240, 250 may look to be attractive for Z. But then what we look out for is in terms of momentum and whether the trend is starting off or not. So far for Z, there are no signs as such.
My point is that is actually from Kalpesh Patel from Gujarat, so I stand corrected. Thank you, Kalpesh Bhai, for this query. Kunal, my limited point is that a bird in hand is better than two in the bush. Now, Z is more like a toss of coin.
Correct.
The deal goes through 15% swing. The deal fails through 15% downside. It's like a 50-50% probability.
Correct.
In markets, if you have a 50-50% probability, then you're better off betting on a lot of other outcomes.
Exactly.
Rather than this single outcome, right?
Correct.
50-50% probability means that it is actually a throw of coin.
Yeah, you're not, I mean, the probability and the trade is not in your favor.
When you buy a technicals or buy or sell, what is the probability you look at? 50, 60, what is the probability you look at?
So the entering probability which you look out for is at least 75%.
And Z is 50%, this percent, that side or that.
In fact, on my scale, it is less than 50%.
So then it's a no trade right now.
Exactly.
If you want to buy after the news because the stock will go through massive re-rating.
Even if you buy at 280, which is a confirmation, so 15% higher from current levels, you are happy buying there because you know that the news flow is out, the stock trend is now stabilized. At least you will not see those knee-jerk reactions on the prices.
So don't try and guess the event, Kalpesh Bhai. Best is that wait for the event. It is better to buy higher. Because if the event goes through, which is the merger of Sony and Z, then trust me, the franchise value would be very different than what it is right now. So then, for long haul, Z becomes a portfolio stock. But before that, both technically and what my understanding is, the probability is not in your favor. Second query, 2,500 shares, first source. This is from Rakesh Bhatnagar. Bought at 141, long term.
So I think now the stock is at 200 plus. My only catch with many of these so-called mid-cap IT names is they've entered into a bit of a not a euphoria, but a bit of a frothy area or overbought area on the charts. Now that is one of the major reasons why my suggestion would be to try and book out profits over here. At least a 50% profit booking should be advisable on first source.
And one more query, 700 shares of Union Bank at 123. And from Mr. Pawar, 1,160 shares of IDFC at 88. Let's look at both the stocks, Union Bank and IDFC.
So I'm actually very bullish on the PSU banking prospect. So, because we were discussing this in 2022 end. That many of these PSU banking stocks had gone through a phase of rally, then they were overbought, they went through a 9 months of correction, and now these stocks very recent, so as you can see on the charts, very recently these stocks are coming back into the breakout mode. So they could replicate what happened in the second part of 2022. I would expect at least a 15 to 20% further rally for Union Bank and for many of the other PSU banking names, especially the smaller digit ones. And same would be the case with IDFC First Bank. There's a first sign emerging on the charts. These stocks coming back above their 200-day moving average, which is the first sign of confirmation. A V-shaped recovery, inverted head and shoulder. Okay. So all of that indicates that possibly we could be looking at a bottom for IDFC.
Okay, so hold both the stocks.
Hold both the stocks.
All right. Thank you, Mr. Pawar, once again, and thank you, Kunal, as always. Great to have you on the show. And that's it on this edition of Tracking Trends with me, Nikunj Dalmia. Thank you for tuning in.